G'day. As the volatility continues, we're seeing a lot of up days, big up days like yesterday on the 4th of Feb, and seeing a lot of down days. It's easy to get wrapped up in the emotions of the market. But this video is to give you a bit of an idea of what we're doing and what we're concentrating on. And what we constantly are looking for and concentrating on is just finding businesses that have got excellent qualities and things that will make these businesses stronger in the future. So they're the things we're focusing on. We're not focusing on the doom and the gloom of the market. For the most part, we treat that as noise, and we see the volatility as opportunities. But there's probably a few things we wanted to focus on when we're looking at businesses. So we're not worried about the market as a whole. We've got research we receive that gives us an idea that we believe our economist thinks the market is cheap. But then we start focusing on the businesses themselves. So what are we looking at within a business? Firstly, you've got to have a decent balance sheet. So a lot of the companies we're looking at either have minimal debt, and some debt is fine. We're not turned off by debt as long as it's used appropriately through acquisitions or even buying back shares at discounted prices. So a strong balance sheet. Many of the companies we invest into have no debt, and they have $100 million in cash ready to be applied or invested. The other thing we look at is the sector. Really important. One area that we've been out of for many years and has been the mining services area, and I'm sure you'll agree, you don't want to be owning a bookstore, a CD sale or DVD sale store. I think we'd be a little bit more keen in buying a video rental store. We'd prefer to perhaps own Google or Netflix as an alternative. So the sector is really important. Are there any headwinds into a sector? And I think it's something we highlighted many years ago as we were worried about such a strong growth in China for many years. You just know these things can't continue on, and the artificial spend that the Chinese government did through their infrastructure build to keep their economy going during the GFC, that has now come to a halt. So we've stayed out of that area for many years. That include the resources and the companies that looked after the resources sector. So the sector is very important. We need to have some tailwinds. And tailwinds, what I mean by tailwinds, that might be as we move to a cashless society where we're using our credit cards more, we're using PayPal, which used to be lumped in with eBay but is now a separate business. So we're using our credit cards, our phones and the internet to transact. So there's a lot more growth in that area to go. So they're tailwinds of change that are just going to happen. Whether we agree with it or not, they are happening. So that's what I mean by this sector is very important. I think healthcare is a really important tailwind that we've been on for many years. The baby boomers is a global phenomenon. It's not just here in Australia. So as the baby boomers get older, they're going to need more healthcare. So I see that as a very good and strong investment theme. The other issue we look at is, as my pen, is earnings growth. We need to invest in business that can grow their earnings. Now, obviously, if we get this right, get the right sectors, pick strong businesses that are reinvesting back into the businesses, earnings growth should follow that. And all the companies that we track, it's one thing we're watching really strongly as we come into the half-yearly reporting. We're going to be checking out earnings growth, and we can see that what happens when a report comes out with a company that they believe that earnings and profit is going to be substantially higher than the previous year or from what they expected. You always see a jump in the value of the business and the share price itself. So the valuations of the business will jump based on earnings. So if we get the sectors right and we've got good management and strong balance sheet, earnings will hopefully grow, and so they're the things we're looking at. So there are quite a few others. Scalability of business. Can they scale their business without incurring substantial extra costs? Funds management is a business that is highly scalable. The software sector is a business that's highly scalable. Develop your product, your piece of software once and sell it many times. So there's a lot of factors we look at, but these are three main things that I consider when we're looking for quality sectors with growth prospects, and gets down, are they doing well as a company. Thanks for listening, and I'll see you next week.